Good evening. I'm Peter Resnicek from ShadowTrader.net. This is, of course, another edition of the ShadowTrader Video Weekly for Sunday, August 22nd, 2021. Very good to be back with you guys, of course, here in the new studio. Started recording here last week. Really excited about all this. Last week, I titled the video Dancing on the Edge, and that was a apropos title because we did have somewhat of a break. We fell off the edge, so to speak. As I expected that there was chance that we'd fall off the edge. The problem is we didn't really go too far. Typical of this market, real strong sellers just don't seem to emerge. So the technical picture is a little bit cloudy, I would say right now, and I'm going to get into that in a little bit much more detail than that. But because it is, I went onto my Twitter feed, and this was on Friday afternoon. I generally record these videos on Friday evening, as I'm doing so right now. And I said, what should I talk about in the video? And the Twitter feed kind of came alive, and lots of people came up with some great ideas. We're going to go through the Twitter feed, and I'll see what type of questions people were asking. Can't answer them all, obviously, because just within the scope of the video, how much time we have, but we'll get to some of them. And in the context of answering those questions, I think you'll learn a lot about the market, about certain stocks. Crypto was one of the things that was asked about, so we'll definitely touch upon that. And of course, what the market is doing in the bigger picture in terms of technicals, how I see things right now, how I see things potentially for next week. So within the context of those questions, I think we'll answer a lot of things, and hopefully everybody will come away just slightly more enlightened, if I could. Beyond that, we're going to do a trade of the week this week that I'm really excited about. It's a fantastic trade that I want to teach you how to do, that is not that difficult to pull off, but can be very, very lucrative if you are an active trader who is, excuse me, willing to watch the market all day, especially on a Friday, on the third Friday of the month. Did a trade today with my weekly options advisory folks that was a options expiry pinning trade. If you don't know what a pinning trade is, basically stocks will tend to pin at certain levels, usually round numbers, especially big name marquee stocks. I sometimes refer to these stocks as jumbotrons, Apple, Amazon, Facebook, etc. Right? There are these big marquee names that everybody knows about, and oftentimes they will pin at round numbers. And I did something with Amazon today, early in the session, looking for the 3,200 level to be the close. And I'll tell you what, while I'm doing the beginning part of the video, before we get into that, why don't you go to your trading platform and check out where Amazon closed on Friday at 4 p.m., all right? I think you're going to enjoy that a lot. All right, let's get into the Twitter here. So this is my Twitter feed here, and I encourage everybody to follow, if you could. You can see right there, I've put up the handle on the screen, at Peter Resnicek. I post, some pretty good stuff here now and again, so you can follow me there. And anyway, I just asked the question of everybody, what do you think I should think to, what should I talk about in the video? And let's look at what some of the responses were. NVIDIA breakout, love that one. I put that on my list, actually. It's what I am going to talk about. I think the stock looks fantastic, and I think there's a reason why NVIDIA is stronger than the market, and it's going to tie in a little bit with some other analysis that we're going to do. What else we got here? Let's see. Is there support for a stay-at-home or reopening play? Not bad. Let's see. Fund flows, overall capital. Signposts that you're using in the majors and sector ETFs to help determine when you'll pull the trigger for long or short trades. That is good. We'll definitely get into that, kind of in the context of what we're going to talk about in terms of when I show you the charts of the majors, etc. We will touch upon that. Just as long as the Fed isn't tapering, then BTFD, yeah, agreed, Jack. I mean, completely agreed. Basically, that's the play, I think, until they do something. I've been saying that for a while, that until the FOMC changes their stance markedly, I mean like really changes their stance, like kind of a hardcore taper, or we are raising rates definitively earlier than we thought, something like that, it's hard to see any sort of a real change coming about in the market. Enter name here, great handle. How do you identify tops or trend changes? That's a good one. Okay, that will definitely come about. Some Mark Douglas psychology and trading. Dude, need I say more? Got my copy right here. This is a classic, all right? RIP to this gentleman. He passed away some time ago. He was a giant in this space. And this is one of the best books I've ever read on trading psychology, all right? So definitely check it out. Disciplined Trader. All right. Mark Douglas, let's see, all things profile, nuance, and narrative. What else we got? Another NVIDIA. Bitcoin, please. Yes, Vil Mantis. I will definitely talk about Bitcoin. It's on fire. It's picked up again a lot. We're going to talk about BTC and Ethereum. I kind of like Ethereum a lot better as a longer-term investment, but we'll definitely talk about that. What else we got here? Jackson Hole is being baked in as a nothing burger. We will never see the 200-day moving average again. Now the Fed has taken over the world. Okay, we'll touch on that as well. All right. I think we'll cut it off right there. We've got a few topics. I've actually jotted some of these down, and let's get into it. All right, let's start with this NVIDIA question. A lot of times we start just with the major averages, but why don't we start with an individual stock? This is something that somebody was asking about on Twitter, a couple of people actually. And I think it's a good one to talk about, especially in the context of what's going on with crypto right now. Crypto has started to really wake up a bit. Excuse me. I think we almost hit 50,000 on Bitcoin on Friday. Ether has also been strong. NVIDIA is a beneficiary of that. The more bullishness there is around crypto, it would follow that there's more bullishness around mining. And what does NVIDIA do? They make GPUs, graphics processing units. And what are those used for? Crypto mining, also gaming. And both of these sectors are kind of hot. So I think NVIDIA is kind of perking up on the heels of that. So let's look at the chart. Chart looks fantastic here. I'm actually a little bit disappointed in myself that I missed the breakout. I actually had this written down as something that I wanted to look at. I didn't think it was going to break out, and was kind of busy with other trades on Friday. What I really should have done is just set an alert right here on the trend line break. But this is just an absolutely gorgeous chart. One of the things that comes to mind right away when I see something like this is, do I see an increase in volume, basically, when the good stuff is happening? When I say the good stuff is happening, you have a reversal here and you have this move up to the trend line, especially here. Do we have an increase in volume? Absolutely. That is going to help a lot in terms of whether or not this kind of falls back down. These stronger volume rallies tend to hold up better than a weak volume rally. So overall, I love it. I think there's the Bitcoin mining story. I think it's just fantastic. Let's get into BTC. Also a question somebody was asking. So very interesting how we have a classic, and I do mean classic, sort of box here. And the consolidation of the box area leads you to what? To another base that builds. And most importantly, it builds outside of this trend line. It's much more bullish than had we just kind of dribbled along here and crossed the trend line by time and not price. Here we broke out by price, not time. We actually had an actual price breakout, and then we've balanced at a higher level. And notice here at the base of the box here, we never fell back down into range. We stayed high, and that's good. I like that. So obviously the 50,000 is another level. And then do we crawl to the 65? Honestly, I think we do. I'm very bullish on crypto. I think we kind of move in that direction. So I like it here. Let's take a look at ETH. This is actually the ETF. I need to actually put on ETHE, or excuse me, /ETH. I apologize, not ETHE. That's the other one. Classically coming up to a key fib level, 61.8, and that's where it's having trouble. So there's your basic signal that ETH is going to increase the odds of moving back up to the all-time highs is once you get a confirmed close, meaning a daily bar that would close above this level, and then boom, you're good to go. All right, so look for this level in ETH at the 3375 to 3400 area, and that should precipitate obviously the move to 35 and then take it from there. But honestly, same way as what I'm seeing with BTC, I think that this is just going to be a slow grind like this in this direction, and then at some point people are going to wake up and say, oh wow, it's all at new all-time highs, and it'll be like a classic cup and handle pattern. So you'll have the cup, then you might dribble off a little bit, and then you'll really be off to the races to much higher prices from there. All right, one of the questions that was asked was also how to identify tops and trend changes. So I think for that, the best way that we can talk about that is to get into some of the majors right now and look at what's going on in the major averages, because there were some recent tops and maybe some trend changes as well. So let's take a look at that. Let's start with SPX. So I've left the channel on from last week's video. This is the channel that we talked about. And you can see the touches here. Here's where it sets up. And then I just drew the bottom one kind of matching it. So obviously, if we were to move to the downside target would be 4,300, but it doesn't look it. Here's where what I feel is puzzling about it is that you had this liquidation break after you were dancing on the edge, right? Here's where we were dancing on the edge. That's where we made the video last week. And when you broke the 20. First you tested the 20 and bounced, then you broke the 20, and then you stopped ahead of the 50. You didn't even get to the 50 period moving average, and you certainly didn't go to the low end of the channel. And the fact that Friday's action was so bullish, closing back above the 20, really kind of leaves the market in sort of a no man's land, as I always say. Right? One of the things that I talk about all the time is, can you draw the midpoint of a channel? And we're above it, so we're kind of in the upper half, but it's just, to me, it's kind of nebulous. I think overall the NDX is showing a much clearer signal, and I'll tell you why. This is a really good-looking chart for a lot of reasons, and this is actually a technical pattern that I discuss very often. It's I coined a phrase that I believe is original because I never heard anybody else say it, but the phrase is seller's shut off. I have this phrase that I coined called seller's shut off or buyer's shut off. What does that mean? A seller's shut off pattern is when the pattern in the stock or index does something that makes it almost, and I say almost because nothing is ever 100%, but makes it almost 100% certainty that price will not travel back to the low end of the pattern. So you have some sort of a come down, let's say it's a seller's shut off. You have some sort of a come down, you have some sort of a reversal here, and then you have this move up. And I'm going to show you shortly on the chart what the seller's shut off move up looks like, because that's really the essence of the pattern. And when you move up from that bottoming area, when that pattern exhibits itself, it's almost a 100% chance that you will not go to the bottom, that it won't fail from there, okay? So let's look at the chart here. What exactly is a seller's shut-off pattern? So this seller's shut-off pattern in the NDX is not yet fully complete, but I want to show it to you regardless. Here's what I'm looking at. It's basically this pattern from here to here. And what is the seller's shut-off pattern? It's very simple. Seller's shut-off pattern is when you have a lot of candles going down in one direction, and then you have only a few candles, preferably 3 or less, taking back all of the multiple days that it took to go down. And once price gets to here, the odds of going to here, okay, are practically zero. And that is a powerful pattern wherein you can get long from there and look for moves up. You can sell puts under here. You can look for some sort of a pullback that is only some percentage of this move with the confidence that you won't go back to here. So you can basically buy every pullback from there. And that's the pattern that the NDX is exhibiting right now. It's not obviously there yet, but for next week's trade, I want you guys to pay very, very close attention to the all-time high here in the NDX, but importantly, not because it's an all-time high, but because it would be a seller's shut-off pattern. If we were to get there in such a short period of time, the odds are very strong that, like I said, A, we won't go back to the low end of that pattern, and B, we will move higher from there. All right, keep that in mind. All right, let's take a quick look at the rut, round it out with our technical roundup. We got the breakdown to the low end of the channel, sort of. That was here. I kind of wish I was more active in this. This is an index that I was looking at for a while. It had this sort of rounded top. I have to be honest with you, I shied away from this trade mostly because it was in the middle of a range. I just don't like stuff that's in the middle of a range. You can see I purposely left the dotted line here, which cuts the range exactly in half. And as we kept just kind of vacillating around that midpoint, I just couldn't wrap my head around a trade. But obviously in hindsight, the short trade was the one to take because it obviously broke down pretty firmly. I think it's also noteworthy that we didn't get to the low end of the channel. All right, we still didn't even get to the low end of the channel. You would think on such a move of such a breakout area here that you had long consolidation, you would think that you would at least make it to here. But that's the market that we have right now. Again, it's very hard to get stronger sellers motivated in this market at all. Trade of the week, the Amazon expiration pin play. I'm going to talk about a lot of things in this section of the video that I think can be very helpful to you. But let's just start from the beginning. As I discussed in the intro, basically pinning play, third Friday of every month when the monthly options expire is a lot more powerful setup than just using every week. We have weekly options on many stocks, certainly all the Fangman plus T stocks, etc., but not as powerful of a setup as it is every third Friday. So today was a third Friday. It was an actual monthly options expiry. And thus, I thought that Amazon had a chance of closing very close to 3,200 because it was opening near that level regardless. And what I'm about to show you, what's really most important about this trade is how it was acting. So let's just go to the chart first if we could. So I've set up this little split screen here, showing you Amazon on the right and QQQ on the left. And this is important. This is the first thing that I'm looking at early in the day as I'm trying to figure out, does it make sense that Amazon is going to actually close very close to 3,200? As you can see, it closed almost right on the nose. So the first thing I'm looking at is the relative strength, relative weakness between what Amazon is doing and what the QQQs are doing. Because on Thursday morning, you can see here, or Friday morning, excuse me, we opened here on this bar, and within the first 15 minutes of trade, we screamed to the prior day's high, and we broke it definitively, and we kept going. All the way up here until late morning, we kept going. Conversely, Amazon, if we look at it, was doing what at the exact same time? This was the action in Amazon at the exact same time as the NASDAQ 100 was pushing higher. Notice that the prior day's high from Thursday in Amazon is all the way up here and the stock's not moving. And already very early in the morning, it is exhibiting signs that there are strong sellers at the 3,200. So when I see that, that's when I act. So you can see here, this is the play that we actually put on with Weekly Options Advisor. And I'll just walk you through that for a second. It's this one here. And you can see the initial play was a call broken wing butterfly, and this is important, using a BWB so that it starts for a credit, because remember, we don't know for sure if it's going to close at 3,200. It could scream through it, it could close weak, etc. And if we put on a debit trade, it's not going to be as worthwhile, right? There's a chance that we could lose money. Obviously, we can still lose money on the credit trade, but we can really only lose on one side, right? Think about it. If you have a butterfly that is a debit, if the price blows through the butterfly and you're on the other side of it, north of it, if it's a call spread, that's a loss. That butterfly goes to zero. And of course, if you're below it, that's also a loss. So I look at the broken wing butterfly, which I was able to put on for a credit, and we received 50 cents for it. And you can see here by the strikes, we're long the 31.90, short the 3,200, and long the 32.20. In a normal butterfly, it would be 32.10, but in this case, it was 32.20. Okay, so that was put on in the morning, and that's looking all right. And as the day is unfolding, there was a part of the day here where Amazon just started to break down and really look kind of weak. And that would have been this period here. And when I saw this happening, I thought to myself, okay, well, maybe the 3,200 is not the play. Maybe it's not going to happen. And maybe the stock is just going to sort of hang out in this range. And maybe the pin is going to be closer to 31.90. And if that's the case, I would like to pull more credit out of this trade than just the 50 cents. If we had just hung around out here and everything went out worthless, or we never sold the broken wing butterfly, we would just receive retain the 50 cent credit, and that would be all. But I didn't want to just do that. When I saw that weak action, I put on another play right on top of the original trade, which was basically just to add some credit in the middle, which is this part here, and basically put on a call vertical short at the 3,200, 32.20. So what does that do? That essentially changes our broken wing butterfly from a structure that was like this, sort of broken wing, right? And then we added this, which gave us a 1, 3, 2. And that's called an unbalanced butterfly. And our mid strike with the 3 short is still at 3,200. So we're there. And then the play is just to do nothing and wait it out. And as you can see, as the day went on, where did Amazon close? Right at the 3,200, which allowed us to then sell the butterfly, at this point, a unbalanced butterfly for $4 into the close. And you would think it would be a little bit more since we had $10 extrinsic. I actually had a bunch of these, and I was getting about $4.25, $4.40, $4.50. I was just putting out limit orders as close to the close, closing it as close to 4 p.m. as possible. The reason that it doesn't trade for the $10 that you'd expect, you could gamble and just sell out the 31.90 and get 10 bucks. But then if you're short 3 units of the 3,200 and you have some close like, within the last 30 seconds of trade, it just pushes up over, well, then you're short all those calls and then you're going to be long stock, and you don't want to do that going into a weekend. So we were closing the butterflies between 4 and 4.50, which I thought was fantastic. And what's the essence of the trade, which is amazing, is think about it. Entered for a credit, put on another credit, and then close for a really large credit, right? It's very rare that this happens, but we do this all the time in Weekly Options Advisory. If you'd like to join us and do trades like this with me in real time, just by getting alerts to your phone, click the little card that's appearing there over my left shoulder, and you can sign up and join us. And that is the crux of everything I wanted to talk about, but let's recap to make sure that we just hit all the points and answer all the questions from Twitter, etc. Firstly, let's just go back for a second to that trade of the week. Watch the stock early. I'm a big believer that the early type of action in the stock, if a stock is going to do something, it's going to do something from 9:30 a.m. to 10:30 or maybe 11. Sometimes it'll perk up later, but whatever. But if you see that choppy price action early and you have early indications that some key level in a big marquee name stock, like I said, Amazon, Facebook, Apple, whatever, is being drawn to like a magnet and holding while the rest of the market is running, and that stock is already starting to hold at that level, you probably have a pin trade on, and you want to be looking for a butterfly or other to try to exploit that mid-strike at that pin. All right. Markets, very important. So S&P, I'm not really sure, but the NASDAQ is starting to perk up and looks like it's showing some relative strength here. Keep an eye on that seller shutoff pattern. But remember, in order for that to be valid, we really have to go to that high on Monday. It can't be like multiple days to crawl up there. Then it's not really the same thing. We want to have like big body candles going up and smaller body candles going down. So you have this sort of congestion, and like choppy move lower and then definitive move higher, and then it comes up to that peak. That's the seller shutoff pattern. So we'll be looking at that. Again, S&P, I'm not really sure. Russell, I would stay away from. It's now, if it rallies from here, it's just going to go back to the middle of that range. And again, not in play to me at least. Jackson Hole was something that somebody asked about on Twitter. Is it just going to be a nothing burger? I kind of think yes. I don't think there's going to be any real major, policy shift. People sometimes look to that meeting. What Jackson Hole is basically all the Fed presidents, whatever, are going to get together. There's going to be this big symposium there. And sometimes, some stuff leaks out as to what, they may be doing. There'll be a lot of interviews. I'm sure Powell will be on television a number of times. Probably nothing, but just keep it in mind, it's toward the end of next week is the big Jackson Hole meeting. Last but not least, I'm doing a webinar with Terry Lieberman from WindowTrader. He is the creator and founder of WindowTrader software, which is the market profile software that I show you very often in these videos. It's also the snapshots that I take every morning in the Peter's Pre-Market Perspective, which is the market profile newsletter that I write every morning. Check out the little link there above my left shoulder if you'd like to take a free trial for 5 days to that. I'm going to be having a market discussion with him, and it is going to be on the 24th of August next week. I don't have a sign-up link with me right now, but it's on my Twitter. So best thing to do is just go to my Twitter feed. You can see my handle is right there down below at Peter Reznicek. And also, if you are on our email list at ShadowTrader.net, I will definitely be sending you an invite probably Monday of next week before it happens so you can attend. All right. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.